Hello, and welcome to Less is More, where we discuss personal credit, business credit, travel, and life in general. Today's topic is going to be on which score is right. You have a lot of things floating around there about FICO score, credit score, Vantage score, and what I wanted to do in this video was pretty much address the difference between a FICO score and a Vantage score. The easiest way to probably kind of compare those two is sort of like Pepsi and Coke. They're different, but they're still colas when you can look at it. So with that being said, FICO basically is a score where it was created by the Fair Isaac Company, I want to say back in 1989. And basically what it does, it uses details on the borrower's credit report to assess your credit risk and determine whether to extend credit. FICO scores consider data in 5 areas to determine your credit worthiness: payment history, the current level of indebtedness, types of credit used, length of credit history, and new credit accounts. FICO credit scores are a method of quantifying and evaluating an individual's credit worthiness. That's the bottom line with it. FICO scores are used in 90% of mortgage application decisions in the United States. You can improve your FICO score by paying your bills on time, using less than 30% of your available credit, and having a mix of different types of credit. The scores range from 300 to 850, and with scores between 670 to 739 range considered to be good credit scores. 740 and above are considered to be great. Again, the FICO scoring methodology is updated from time to time, and right now the most recent version is a FICO 10 suite, and it was announced in 2020, but not too much has really come about that one. Now, the Vantage score. The Vantage score is a consumer credit scoring system that was created by a joint venture of all three of the main major credit bureaus: Equifax, Experian, and TransUnion. This model is managed and maintained by an independent company, of course, named Vantage Score Solutions, and it was formed in 2006. So it's a jointly ventured by the 3 bureaus. The Vantage Score models compete with the FICO score, which was produced by Fair Isaac Company, FICO. And like the models developed by FICO, Vantage score models operate on data stored in the consumer credit files maintained by the 3 national credit bureaus. Vantage score models and FICO models use statistical analysis on those data to predict the likelihood a consumer will default on a loan. Both Vantage score and FICO models represent risk of a loan default in the form of 3-digit scores from 300 to 850, as I stated before. Of course, with the highest scores indicating lower risk. But Vantage score and FICO score use different proprietary analytical methods, and scores from one system cannot be translated directly to another. Just for you to know a little bit, the Equal Credit Opportunity Act makes sure that both the FICO score and the Vantage score are both sound and empirically derived. Therefore, a company just can't come out of the clear blue sky and say, oh, all of a sudden I'm going to create this score and this is the one we're going to start using in the United States. It has to be actually approved, and it has to be and conform to the Equal Credit Opportunity Act. The difference between the FICO score and Vantage score, FICO scores require having at least one account that has been open for 6 months or more and has been reported to the credit bureaus within prior 6 months, whereas the Vantage score can be issued from just 1 month's credit history and with just one account reported within the prior 2 years. Vantage score does capture consumers with little or thin credit histories. Another thing is that tax liens are weighed less heavily in Vantage score than in FICO scores. Another thing is when a credit inquiry is made at one of the credit bureaus, it negatively impacts credit scores. The current version of the FICO score treat multiple credit inquiries made within a 45-day period as if they were a single inquiry. For instance, when you buy a car, you're normally shopping, so you have several inquiries that are made on your credit report. So in reality, if that's made within a 45-day period, that really only counts as one. But again, only if this is for the same type of loan. whereas Vantage score counts multiple inquiries within a 14-day period as if they were a single inquiry, even if the inquiry were made for different types of loans. So FICO is like a 45-day period, same type of loan, mortgage, car. Vantage is 14 days. And then the other thing is that the older FICO 8 score, which is still often used as of 2020, treated medical debt like any other unpaid debt for scoring purposes. Medical debt has less impact than other unpaid debt in the newer FICO 9 and also in the Vantage score 3.0 and forward. I hope this has helped you in giving you a better understanding of what the difference is between FICO score and the Vantage score. If you are interested in looking at your FICO score, I would definitely recommend that create an account with Experian, because Experian does give you your FICO score for free. Don't buy anything, just do the free version of it. If you have a Discover credit card, they also give you your FICO credit score for free as well. And I don't think you have to even have the Discover credit card to get your FICO score with them. Of course, Credit Karma is Vantage score. And in my opinion, which one should you get? You should get them all because they're all free. And again, education is knowledge. And if you know about it, then you could do something about it. Again, please like and subscribe my channel. Less is more. Thank you for watching. Talk to you next time.